On today's World Insight, the world economy reeling from pandemic uncertainty, how are nations across Asia, Europe, and the Americas coping? And the global tourist industry on life support. China's biggest online travel agency tells us about the shocks to the industry.
Just to let them know how bad the situation is.
Here is our host, Tian Wei.
Hello and welcome to World Insight, coming to you live from Beijing. I'm Tian Wei. Today we are going to still focus on COVID-19. As we know, over the past week, pandemic fears and uncertainty battered the global economy. World shares all fell sharply as COVID-19 spread to more countries. Much of the world is facing the sinking realization that billions of lives will be seriously disrupted and that the economic implications are beyond dire. So what can be done to keep confidence? Before our discussion, take a look at this.
Stocks were hemorrhaging. The red on the screens could have been blood. Again, a halt in trading for 15 minutes on Wall Street on Monday, the third time that the circuit breaker has been tripped since last week. European shares retreated after an initial bounce on Tuesday and kept financial markets on edge, while Asian stocks tumbled in choppy trade on Wednesday.
I think definitely it's a health crisis. That's first and foremost. There's no timeline on how we're going to be able to solve this or cure it, and I think that makes it much different than a financial crisis.
Since last week, stimulus packages are no doubt helping. The U.S. Federal Reserve cut interest rates to near zero on Sunday.
Today, we reduced the target range for our policy interest rate by 1 percentage point, bringing it close to zero, and said that we expect to maintain the rate at this level until we're confident that the economy has weathered recent events and is on track to achieve our maximum employment and price stability goals.
Our commitment to provide support in this time of need.
The Eurozone had so far deployed a fiscal boost worth 1% of its GDP to help the economy and pledged to do more if needed. The IMF stands ready to mobilize its full $1 trillion lending capacity to help member countries deal with the crisis. The World Bank Group has announced $2 billion more, bringing its commitment to $14 billion in funds. But more could be needed before this is over. Denial, anger, bargaining, depression, and finally acceptance. The world comes to grips with the reality. The volatility will continue until markets are certain the situation is under control.
And clinicians. For more on the turbulence in the global economy, joining us in Brussels, Fraser Cameron, Senior Advisor at the European Policy Center. In Los Angeles, William Lee, Chief Economist of Milken Institute. Welcome to both of you, gentlemen. I want to start by asking you whether the Fed is running out of tools to give more confidence to the current state of the economy. Mr. Lee.
Far from running out of tools, the Fed has a lot of tools left in its basket because the first set of tools was put out there to set the stage, to lower interest rates, lower credit. The big bazookas are pulled out. Now they're going to be pulling out macro-prudential policies. That's a fancy word to say they're going to target the supply of credit to the people and companies that are most affected by the virus and make sure that the financial infrastructure is solid and in place to be able to channel that credit when it's needed as the recovery starts to begin after the virus is contained.
What are you specifically referring to, Mr. Lee?
I'm thinking of the repo markets and the short-term funding markets. Right now, the Fed is starting to put out a commercial paper facility to ensure that companies, when they're in distress, could go to the banks or go to the markets themselves and to be able to grab funding from the markets to be able to tide them over as they suffer from cash flows and the lack of sales.
Now, of course, the U.S. is at the early stage, quote unquote, compare at least to some of the other countries in terms of fighting COVID-19. The country is busy preparing for some of the later possibilities. Mr. Lee, do you think the machines, let's just say, the financial economic machines can still operate as they should be as we go further, quote unquote, into the fire?
What we're all concerned with is the market turmoil. Why is it that the equity markets keep crashing? And I think what we have to understand is equity markets are looking forward and trying to understand the process by which the virus will progress throughout the world, but also the United States. And so this process of price discovery is keeping the markets with a lot of uncertainty. That's something that I think we have to deal with. But the Fed policy that's been put in place now and the administration's policy is to make sure that the underlying financial infrastructure is there to allow the price discovery. Sometimes the price discovery is very violent, and sometimes the holes in the market start to develop, and the Fed's effort right now is to plug every hole they see.
Right. We understand in a few hours it's likely the U.S. president going to announce some plans. We do not know exactly the content about people's Medicare and Social Security, as well as what the government will do at the federal level for the catering industry, hotels, restaurants, bars, things like that. Mr. Lee, what can we expect?
I think the president and policies has been trying to learn lessons from China. That is, come in big with a lot of spending to try to contain the health crisis, and then come in big to support the people as they have to stay home and the economy shuts down, both on the supply side and on the demand side, and then to make sure that there's money given to people so that when they come out of the recovery stage, there's money to spend. So targeting the money to the victims of the virus is really critical, and I think that's one of the lessons that we have learned from China, which is get to the health crisis first and detect it and contain it, and then make sure that, as China is doing now, coming out of the virus situation and trying to restart the economic engine, that there's enough fuel, that is enough money to be able to start it in the hands of companies and in the hands of individuals.
Mr. Lee, you may not know necessarily that China is still in the middle of this fight because the situation has been evolving. Now, instead of some of the homegrown cases, import cases become one of the biggest concerns. 150 already we have reported so far imported cases of COVID-19. Having said that, though, I want to continue to ask you a little bit more along the line you just answered. What about some of the specific issues that the federal level has to deal with, and how is that likely to be the division of labor, as it's always been a very tricky issue in the U.S. Between the federal and also the state level in terms of what policies to use to boost the economy, and also in terms of the money that needs to be spent on the emergency of the health issue for the next 2, 3 weeks and probably a month or a month and a half.
Right. The timeline that China has set out for the rest of the world to see is that if you're successful in containing things and limiting the amount of contagion, you eventually will, after 2 or 3 months, start to see that the internal contagion is gone, and you need to worry about external contagion. And so I think the U.S. is trying to be preemptive by putting in these travel restrictions to try to limit the amount of external inflow right now. The key, your question is absolutely spot on about the United States. The federal and state governments have a tension between who spends on what, and those are being negotiated now. But I think what President Trump has been trying to emphasize is states can take the initiative and we'll give you the money as you need it.
Okay, let's go to also Mr. Cameron. After drinking some water, Mr. Cameron, I want to ask you specifically about the European situation, because quite a number of the European countries, in fact all of the EU member states, are having COVID-19 to fight at this moment. A very heavy moment, I guess, for the European continent. So what about, on the one hand, fighting the virus and the pandemic, on the other hand, still try to keep the economy in shape at least, or at least intact?
Well, it's a very difficult balancing act, because most governments have announced huge emergency packages of loans, guarantees to try and keep businesses afloat. But of course, nobody is going to resume economic activity, and certainly not like the way we're used to, until the virus is brought under control, until people start going shopping again, and people start traveling again, people start going back to work again. So until we get it really under control, this is a damage limitation exercise. And of course, we can look at what's happened in China and say, well, that's one way to tackle it, and it may be the trajectory along which Europe goes, but nobody knows for sure, and that's the problem. It's the uncertainty that's really shaking the markets here.
Mr. Cameron, another question is, you know, China was experiencing, of course, a lot of challenges during the past 2 to 3 months, but still the economy managed to grow with very limited possibility with the earlier already existing infrastructure. What I'm talking about is e-payment, for example, delivery services, logistics services. But of course,
well,
the European...
As regards Europe, the projections are certainly for almost zero growth this year. Depends what happens, obviously, in the second part of the year, but most economists are predicting more likely there will be a recession throughout the European area this year.
But what about, you know, with the current situation, how to deal with it, but still manage to do some production and manage to still have the business running? China's case, I'm not sure whether it's suitable for everybody because infrastructures are different. China has earlier already had the e-payment quite popular among its population. And also the delivery and logistics services never rested over the past 2 to 3 months. With the earlier already existing, once again, operation and scale. But Mr. Cameron, how much do you think the Europeans are likely to take on what China experienced and experimented? Or maybe the European continents and economies are thinking about something new or of their own characteristics, Mr. Cameron?
Well, it's a mix. I mean, obviously the Europeans don't want to drop the big project called the Green Deal, and that's why governments like in Germany have introduced, you know, new measures to boost hydrogen development, especially for vehicles. So there's new developments that are ongoing. At the same time, the immediate crisis is to try and protect jobs, try and protect some companies from not going bust, and allowing people some breathing space so that they can see how they can maneuver best over the next 2 or 3 months, and it will vary from industry to industry. Obviously, the travel and hospitality industry is the worst hit here, but also car production is stopping in many countries just now as consumers are not prepared to go out and buy. So this is affecting supply chains, including supply chains between Europe and China. So that's the problem at the moment. No one quite knows exactly how long this will go on for.
Yeah. Mr. Cameron, however, on the other hand, we have been hearing from the European companies, some of the biggest ones in the world are trying to convert their businesses into something new, at least temporarily, to produce, on the one hand, some of the materials that is urgently needed for the fight against COVID-19. For example, cosmetic companies that are producing even sanitizers. Well, I was told that Mr. Cameron's connection is temporarily disrupted. Now, let me come back to Mr. Lee. Same question too, Mr. Lee. Some of the companies which are well known in their own sector try to convert and change so that they can produce something urgently needed now in the market. Can you tell me about whether that could be a possibility for some of the companies for the future, near future?
Yes, absolutely. That's a great question. Here in the United States, people are learning to change their business models. They're changing the type of output and the way in which they use their people, their labor. People are now telecommuting, the tele-doctor services. That is, if you have a problem, medical problem, instead of going to the hospital or going to doctor's offices, they're using a telephone to call doctors for medical advice. So there's a lot of remote production and remote consumption being put in place in the United States today, which I think is a great thing because it allows much more flexibility in the production structure. So going forward, one of the strengthening characteristics that will come out of this terrible virus situation is that the economic structure will become more resilient and more flexible.
We hope that will be the case. But Mr. Lee, you know, earlier we were playing some footages of Costco. Of course, a lot of people go there to shop, but Recently, we have also heard suggested by the federal level, the U.S. government, for U.S. consumers to buy grocery for 1 week's use only. Well, many people have been suspecting what this means. Does this mean that the shops will not be able to provide a sufficient amount of groceries that people need them? Or does this mean that hoarding is going to put some of the shops into problem? Mr. Li, I'm sure you have better grasp of the real situation than we do here. Mr. Li.
Well, one of the things we know as an economist who studied consumer behavior, we know for sure that globally, whenever there's an economic disaster or natural disaster, people immediately hoard toilet paper and buy fresh milk, and it just goes on to other consumer staples. So one of the things that has happened in the United States is that even though our retail supply chain and our grocery supply chains are completely intact, no destruction whatsoever because of the virus, people are just getting scared.
Yeah.
And that lack of information is one of the biggest problems that they face by any authority globally, whether it's Europe, China, or the United States. You need to tell people what is the consequence of bad behavior, and bad behavior is consumer hoarding.
Mr. Cameron is with us now. I hope you can hear me. Wonderful. Mr. Cameron, were similar situation in the European economies? We're still having some problems linking to Brussels. We hope it will be connected a bit later. Once again, Mr. Li, coming back to you, thank you for being supportive throughout the conversation. We earlier, Mr. Li, have been talking about some of the issues that the consumers and investors around the world have noticed. But there are other things, Mr. Li, if I could have you also here to take a note of, is the underlying transformation that we're likely to see of our economies and of the trade mechanism and of priorities of economies and of the balance act every economy has to take and the result it has to bear as a result of it. So, Mr. Li, what do you make of this much bigger picture?
That's such a great question. I'm glad you brought it up, because one of the things that I have been writing about is one of the lessons learned out of this process, starting with the trade agreement with China, is the understanding that globalization is much more complicated than it used to be thought of. You cannot take simplistic globalization principles and say, let me specialize the supply chain and have only one source for my inputs, or one source of intermediary inputs, and one source for clients and customers. So I think one of the lessons that we will learn as the industrial structure starts to gear up again is that every company is going to be asking, where are my backup supply chains? Where are my backup customers? If my customers in one place start to go offline, where will I get other customers? And so diversifying both on the supply side and the demand side will be one of the key challenges for every CEO going forward, and every CEO is going to have a different answer, but certainly it will not be to specialize your supply chain and be vulnerable to supply shocks and demand shocks of the sort that we've seen caused by this global virus problem.
Indeed, Mr. Li, I'm sure a lot of people are thinking, but at the same time, diversification at this moment, particularly at a time of crisis or right out of crisis, that does mean it takes a lot of money. There's a bigger price to it to diversify than, let's just say, in a very peaceful moment. So would people be able to afford that? I mean, after all, when we have a global supply chain, the beauty of it is the cost will be minimized to the most, and also to incorporate all the best and advantages of everywhere. So will the thought of having diversification really rival the advantages of having a real global supply chain?
Great question. And the response to that as an economist is you cannot have one end of the answer. A solution has got to be a trade-off. You got a trade-off between minimizing cost and minimizing risk. And you cannot minimize both at the same time. So somewhere we're going to have to pick a different trade-off between the risk of being caught out with a supply shock or demand shock and the lowering the cost of production so that you can maximize the well-being of your economy. And I think we have gone, certainly the virus situation has shown we've gone too far in minimizing costs and have not taken enough consideration into minimizing risk. And the risk of being stopped out, the risk of having no inventories, the risk of having no supply. Those are the risks that we have to bring back into the picture.
Mr. Lee, I've been talking to companies, big and small, medium and big sizes, and also whether it's Chinese companies or international companies. They've been telling me cash flow is going to be a huge problem from now on, no matter how big they are. So, Mr. Lee, when everyone is crying for cash flow, what does that mean for the next stage of financial policies? And also the cooperation among economies and financial bodies about those policies?
Great question. The issue of cash flow is a temporary one. We both agree that cash flow was not a problem before the virus because if the company is making money, it has clients, everything is fine. So really we talk about temporary tiding over companies that have these cash flow problems because of locked up supplies and locked up demand. So the key issue is, can government supply the credit that's necessary for the companies to tide them over this period? It could be a long period. It could be as much as half a year to a year. So the Federal Reserve, for example, is targeting all their efforts to being able to make sure the financial plumbing is in place to be able to supply the credit. China is doing the same thing by bolstering its banking system and bolstering its monetary policy, lowering the cost of credit to be able to make sure that the credit is available to the people and the companies as they need it to tide them over. Going forward, I think we have to, again, consider risk management and diversification. Now, sometimes people call it diversification. You worsen your profits without a doubt, but you also minimize your risk. And I think that's the new calculus that every CEO is going to have to conduct, both in China, Europe, and around the world.
And now, of course, this is a critical moment. International cooperation is extremely important. However, Mr. Lee, we are also experiencing at the same time a big test of globalization. This one probably is even bigger than geopolitics earlier. So, Mr. Lee, how is this specific pandemic going to transform our understanding of a lot of things? Of course, we're still in the middle of it, so we might not be able to think about everything clearly, to the utmost, but still, at this point, what's your thought?
Let me steal a phrase from China, which is, globalization will have national characteristics going forward. And I think that's something that we all have to keep in mind, which is to say, globalization per se will be adapted for the needs of the national economies, and a lot of it will involve repatriation of production so that you minimize these risks that I mentioned earlier. But certainly globalization going forward will change, but I think it'll be changing for the better because it takes into account a lot of the factors that were not taken into account before, like national security and just diversifying your demand and supply baskets.
Talking about national security, if I could just follow up a little bit, Mr. Lee, earlier there was a maximization of using the phrase of national security, probably overused for various purposes in terms of trade war, for example. Mr. Lee, are we going to see those examples even further developed for the near future after this crisis we're doing it?
I hope not. I think one of the things that we have to understand is international cooperation is absolutely key, because the principles of globalization is that people have to cooperate in order to benefit globally and each other. But I think one of the things that we have recognized is a virus of this sort doesn't recognize borders. So passing best practices, passing information is absolutely critical. How we pass the information, what tools we use, those will have very national characteristics. Every national characteristic, every government and every people are going to have to decide what will suit us best in dealing with other countries. And I think that's the realm of diplomats, and that's out of my purview as an economist. But I think as an international economist, it'll be critical to be able to have both international mix and national principles as well.
Finally, before we go, we got 20 and 30 seconds for you, Mr. Lee. Will nationalism on the rise as a result of the complicated situation everybody is facing at home? And what does that mean for international trade and certainly economic cooperation policy?
I think without a doubt, when you have a big hit like this, people focus on what's going on in their own neighborhoods and focus on trying to correct what's going on at home. But I think once we get the situation at home contained and people start to have normal lives again, I think the cross-border and the global efforts that were there before will not only continue, they will blossom, because they will blossom in a way that takes into account new national characteristics. And just as socialism with Chinese characteristics is the catchphrase in China, globalization with national characteristics will be the catchphrase for all businesses.
Very interesting thoughts. William Lee, the chief economist of Milken Institute. We hope things are getting better soon. Thank you so much, sir, and also be healthy, also with your family as well. Thank you.